Welcome back to Explain the Charts, your go-to channel for in-depth market analysis. Today, August 14th, 2025, we're dissecting Amazon, ticker symbol Amazon, looking beyond the headlines and into the raw data. Recent news for Amazon has been overwhelmingly positive, setting a highly bullish tone for the stock in the immediate term. Investors Business Daily has prominently featured Amazon as their stock of the day, specifically citing its aggressive expansion into perishable grocery delivery. This strategic push is already reshaping the competitive landscape, causing significant pressure on rivals such as Instacart, and reports clearly show Amazon stock gaining on this very development. Moreover, Amazon's ambitious Project Kuiper, positioned to directly compete with Starlink in satellite internet services, has now achieved a remarkable milestone by deploying over 100 satellites. This not only signifies advanced technological capabilities, but also points to substantial long-term growth avenues and diversified revenue streams for the company. Adding to this optimism, leading analysts are issuing strong price targets. Seeking Alpha, for instance, projects a path for Amazon to reach $270 by year-end, while Telsey Advisory Group maintains an outperform rating with an immediate price target of $265. These powerful positive catalysts are absolutely critical for understanding the market's current perception and the underlying momentum driving Amazon stock. And now, let's see how these narratives are clearly reflected and reinforced on the technical charts. Shifting our focus to the one-day chart for Amazon, what immediately stands out is the robust and consistent upward trend that has been in play since April 2024, when the stock was trading around the $180 mark. This steady climb highlights Amazon's enduring strength and investor confidence in its business model, despite broader market fluctuations. However, even strong uptrends are not without their tests, and we've observed periods of significant volatility. One such instance was a sharp decline that unfolded in early August 2024, where the price experienced a notable drop from approximately $200 down to around $161. This represented a major test of investor conviction. Another significant correction occurred in April 2025, with the stock pulling back from the $196 level to lows near $171, demonstrating that profit-taking or temporary market headwinds can still exert pressure. Crucially, this $170 to $175 range has repeatedly proven to be a remarkably strong support zone over the past year, acting as a trampoline as determined buyers consistently stepped in at these levels. The resilience shown during these pullbacks, often accompanied by increased volume on the rebound, indicates strong underlying demand for Amazon shares. Most recently, another major dip occurred in late July and early August 2025, seeing the price fall from recent highs around $234 to the $211 region. To truly grasp the dynamics of that recent significant event, let's zoom in specifically on the late July to early August 2025 period using the 1-hour chart. Here, the sharp, rapid decline that took place around July 31st is strikingly apparent, illustrating how quickly price can move in volatile conditions. Within just a few hours, the stock plummeted from its high 230s range down into the mid-210s, with several large red candles confirming the intense selling pressure. The concurrent surge in trading volume during this particular period further corroborates the presence of substantial selling, likely driven by broad market sentiment, profit-taking, or perhaps an algorithmic reaction rather than specific company news. What is particularly noteworthy for traders is the almost equally swift bounce back from these acute lows, signified by strong green candles that emerged quickly. This robust rebound prevented a deeper retracement and effectively established the $210 to $212 range as a new, critical short-term support level, showing that buyers were quick to defend this floor. This immediate and strong recovery on the hourly chart provides a crucial technical signal, aligning with the broader positive news we discussed earlier and suggesting that temporary, sharp pullbacks are consistently being met with strong underlying buying strength. Now, transitioning to the 15-minute chart provides us with the most granular view of the very recent price action, covering the period from August 12th through to the closing moments of August 13th. This timeframe captures the immediate consolidation and upward drift following the larger hourly recovery. The candles here show Amazon largely holding its ground and gradually trending upwards, demonstrating consistent short-term buying interest and minimal sell-side pressure. The price has been steadily hovering within the $221 to $224 range, culminating in a strong closing price of $224.56 on August 13th for the daily chart, which is just above this 15-minute consolidation range. This very recent, tight price action reveals that, even within these shorter timeframes, the stock is meticulously building momentum, often characterized by higher lows and steady volume patterns. This orderly behavior points towards a healthy accumulation phase, potentially preparing the stock for its next leg up, especially given the current positive news flow. It is paramount for traders to recognize that the latest news from today, August 14th, confirms Amazon is currently trading even higher, around $231 to $232, further solidifying the strong bullish sentiment and indicating continued recovery past the recent dip. Let's now consolidate our findings to present a comprehensive case for being bullish on Amazon. At the forefront, Amazon's strategic expansion into high-growth, underserved markets like perishable grocery delivery offers a tremendous avenue for future revenue and market share gains, potentially disrupting established players. The remarkable progress of Project Kuiper, with over 100 satellites now deployed, solidifies Amazon's diversification into cutting-edge technology and connectivity, promising substantial long-term upside beyond its traditional e-commerce business. Analyst consensus, particularly the $265 to $270 price targets for year-end, provides a powerful external validation of AMZN's growth prospects, signaling that professional investors see significant room for appreciation from current levels. A critical technical factor is the stock's proven ability to consistently recover from deep and rapid pullbacks, as vividly demonstrated in both the April 2025 and early August 2025 corrections. This, by the dip mentality, showcases strong underlying buying strength and unwavering investor confidence. The sustained upward trend on the daily chart over the past year is a testament to Amazon's fundamental strength and its dominant market leadership, a trend that is likely to continue. Moreover, the current trading price, as highlighted by today's market reports at $231 to $232, is already actively challenging and attempting to break past immediate resistance levels, unequivocally confirming the robust bullish momentum that is in play. However, it's equally important to adopt a balanced perspective and acknowledge the potential bearish arguments and inherent risks when trading Amazon. The recurring pattern of sharp, high-volume drops, similar to those experienced in late July and early August 2025, serves as a stark reminder that significant profit-taking or broader macroeconomic headwinds can swiftly trigger steep corrections. These sudden plunges can erode gains quickly, catching unprepared traders off guard. The 52-week high of $242.52 stands as a formidable resistance level. A failure to decisively break through and hold above this ceiling could lead to a double-top formation or a period of extended consolidation. Should overall market sentiment turn sharply negative, or if there's any unexpected slowdown in Amazon's new ventures like Kuiper or grocery, the stock could easily face renewed and intense selling pressure. For bearish traders, a clear breach below the $210 to $212 support zone, especially if accompanied by high selling volume, would constitute a significant bearish signal, potentially leading to a retest of the $190 to $192 range, or even the long-term support established around $170 to $175. To provide a concise recap for your trading and investing decisions, Amazon is currently operating within a crucial price range, with immediate resistance located around the $230 to $235 area. as indicated by the latest market reports today. A strong, decisive break and sustained close above the prior 52-week high of $242.52 would be a powerful bullish confirmation, making the ambitious $265 to $270 analyst targets highly likely to be achieved in the short to medium term, perhaps with a 70% probability given the current momentum. On the downside, critical support levels to closely monitor include the $220 psychological mark, followed by the more substantial $210 to $212 zone, which has demonstrated considerable resilience in past pullbacks. A failure to hold above $210, confirmed by significant selling volume, would increase the likelihood of a further drop to test the $190 to $192 range, an outcome we would assign a 60% probability if that crucial $210 level is decisively broken. For active traders, always pay close attention to accompanying volume on any breakouts or breakdowns, as strong volume validates the strength of the price move. Long-term investors should prioritize monitoring the continued expansion and success of Project Kuiper and the ongoing performance of Amazon's burgeoning grocery delivery service, as these initiatives are poised to be fundamental drivers for sustained growth. Additionally, keep a vigilant eye on upcoming earnings reports and any major macroeconomic data releases, as these events frequently correlate with the sharp, rapid price movements we've highlighted. Remember, all trading and investment decisions carry inherent risk, and this analysis is strictly for educational purposes only. Always conduct your own thorough research and carefully consider your personal risk tolerance before entering any trades. That's all for today on Explain the Charts. We hope this deep dive into AMZN's news and charts empowers your decision-making. Be sure to subscribe for more valuable and in-depth analyses like this.